Dave, perhaps we've reached equilibrium. Is that right?
Oh, I think we're definitely getting close.
Yeah.
We've been talking for quite some time about the fact that our market's been picking up momentum all year, and we said that 2012 would be the turnaround year. Well, it clearly has been. We're now sitting in, it's now November 2nd, and the third quarter's in the books. In fact, October's in the books, and there's no doubt that the market has returned to something that approaches a solid footing. We're going to be seeing sales this year in Dane County for residential, single-family, and condo. It's going to approach 6,000 sales, which we have said is kind of an equilibrium level. So that's very exciting. The question, of course, it begs is this like a pop and a demand,
right.
and we're going to fall back? And of course, we don't know. But there's so much momentum. The momentum even seems to be building into the winter here, which tells us we'll probably have a stronger opening, and that would suggest that with inventories having gone where they've gone, that we'll probably see a continuation or even a slight increase in sales next year would be what my guess would be. We're thinking about maybe another 10% uptick. But sales overall are up about 25% from last year, just about anywhere you look, and that's exciting. Wow, very exciting.
Is that true across the market, or what? How does the market
it's really interesting. It's very broad-based. Almost any market you go to, you're up about 25%, give or take. It's very, very consistent. All neighborhoods, all markets.
Condos too?
All condos. Condos in the third quarter have been up even more. There's been a lot of activity in condos. So, no, there's a lot of momentum in the market right now.
Wow.
Yeah, great to see.
Obviously, inventories have come down then?
Yes, because of that, there's two reasons. Number one, of course, sales are up, which is burning off the excess inventory. But the number of listings new to the market has been less this year. A couple years ago, we saw a spike in inventory because of the tax credit. We didn't have that this year. So as a result, we've seen inventories draw down to where, for Dane County and single family, we're very close to 6 months of inventory, which is about balanced.
Wow.
And my suspicion is that in 2013 we'll see it go below 6 months, which is going to put a little upward pressure on prices. So very good. Condos still have a little more than that, but that's not unusual, and we're still seeing good demand there. So I think that'll fix itself over time. When you get outside of Dane County, Sauk and Columbia, we have a little bit more inventory to work off. But they've also improved. They're down in the 11 to 12 months range. So improvements all around. Very, very good to see.
Wow. So what's the effect on the rental market with this? You drive around town and you see rental buildings going up all over the place. So are we going to have a bubble there? Or what's
I don't know if we're going to see a bubble, but you're right on with that. The home ownership rate rose during the bubble. It fell during the bubble. During the bubble deflation. And so what we're seeing is a lot of those people who are homeowners are moving back into rentals, and there was a shortage of rental property, and so we're starting to see a lot of rental property being built. The vacancy rates are the lowest they've been. So right now we're seeing good demand on both sides of the equation for both rentals and ownership, no question.
But you said in the newsletter that prices are down a bit, so what's happening with that?
The median price is down a bit. I don't think that necessarily translates into prices overall or dropping or anything like that. Usually when you think about the median, it's kind of like the center of gravity for the market overall. And what we've seen is more activity on the lower end of the market this year. More condos, which tend to be lower priced. Some of the last of the foreclosures and short sales and things are moving through the market. They tend to be a little bit lower priced. I think sellers, to some degree, have finally realized if they want to move on, they have to do what they have to do. So sellers have been very realistic. So for all those reasons, we've seen a small, just a couple percentage point decrease in the median over the course of the year. But if you look at Dane County from the peak in 2007 to now, until right now, we're still only down about 6 or 7%. So we saw very little price deterioration. And with inventories where they are right now, my guess is that in 2013 you'll start to see that go the other way. Prices are about an equilibrium. They're about where they should be, about at fair value. And our hope is we'll start to see those slow 2-3% a year increases starting maybe as early as next year could happen.
Interesting.
Yeah.
And interest rates, as you mentioned, continue to be just really cheap.
Clearly a driver of this is interest rates. Interest rates continue to be below 3.5% for 30-year fixed rate loans in most lending institutions. And consumers have learned that that's what's out there. They have confidence now that we're off the bottom for housing, and with low interest rates, it's a why not scenario. So we saw very strong October as October's go, and that's continuing into November. Of course, we'll get into the holidays here, and we'll see the normal holiday lull, but if the momentum is continuing the way it does, I think we'll see a very strong opening to next year, and some of that will be interest rate driven. Question, of course, is what's going to happen to interest rates as this starts to go. And of course, we don't know. The Federal Reserve has made it clear they want to keep rates low for some time. Through 2015 is their stated goal. That could change. Our guess is that as the market improves, there will be upward market pressure on interest rates. And as long as it happens somewhat gradually and slowly, I don't think it's going to have a negative effect on the market. In fact, it would even have a positive effect on the market because right now the interest rates are artificially low. If they stay too low too long, then we're going to start to see prices rise too fast, and we don't want that either. So a nice slow rise in interest rates over the next couple of years would be perfect. I think in a couple of years you'll see interest rates level out in the 5.5% to 6.5% range for 30 years. That'd be great. And our market can sustain itself over that time. So that's kind of our longer term forecast of where we think things are heading.
So given all this, the 2013 outlook is?
I'd say if anything, we're probably looking for another 10% increase in sales is kind of where our gut is. That'll put us at to a little bit above what we think is the median or the kind of equilibrium level of sales for Dane County. And then I think we'll probably level off there. We'll see, the foreclosures will be gone. New construction will restart. Right. That's been depressed for some time, and that should start to fill in the gap for all these properties that have had to sell and have created the glut. Now we'll get down to people that just want to sell, and people start buying new construction to fill the gap. So I think we'll see things level off somewhere in the 6,000 to 6,500 sales a year range, and that would be very sustainable and it'd be great. So that's what we're looking for next year.
Great. Thanks, Dave. Quite a change over the last few years.
Absolutely. It's good to see.